if we're walking into a situation where we have China and EM in Quad 1 and Quad 2, and US and Europe in Quad 3 and Quad 4, has it ever happened before, a crash in developed countries? Have we seen a crash in developed countries when we see a rally in EM stocks?
Yes and no. I mean, so you could sort of go back to like 2002 when China was really starting to take off and dragging EM up with it. You could sort of go back to the first part of 2008, which obviously is not exactly a great reference point to be buying a lot of stuff. And then sort of 2011 as well. So when the Fed is really going forward in terms of cutting rates, because obviously 2001, 2002, the Fed was cutting rates like a madman, obviously 2008, and even in 2011, QE2 plus Operation Twist. When the Fed is going forward because they're slowing, it's no telling what these assets could do. And I think investors have been burned, really all throughout this sort of post-crisis era, really since, the peak of EM in 2011 and peak of a lot of these commodity plays. Investors have been burned. It's much like the energy sector here in the United States. It's like, who wants to go run out and buy a bunch of EM right now? When all they've been conditioning for is that, with the exception of maybe 2017, EM is not the place to be. So I can understand that. But again, there's historical precedent for, EM to diverge from developed markets, particularly when developed markets aren't, not necessarily, when the Fed is sort of getting really aggressive from an easing perspective. But again, just on the Europe part, I do think it's a misnomer to characterize Europe being in quads 3 or 4 with the U.S. It's actually not likely to be in quads 3 or 4 with the U.S. Again, we have this L-shaped recovery with some back half lift, sort of that's implied by the model. We think if that comes to fruition at the same time EM is recovering, you're going to start to see a downward bias to the U.S. dollar in price terms.